Hello, welcome to the another episode of the Bitcoin Standard podcast seminar. In today's seminar, we will be hosting a debate between Mark, Valek, and myself on the question, are precious metals being demonetized? To moderate that debate, we will have Peter Young, a regular attendee of our seminar, and I will hand over hosting responsibilities to Peter. So Peter, please take it away.
Thanks very much, Saif. I'm really pleased to be moderating this debate. As Saif mentions, the question is, are precious metals being demonetized? And we've got two really great speakers that are going to be talking about this today. Of course, first is our regular podcast host, Saifedean, who, as I'm sure many of you know, is the author of the Bitcoin Standard, one of the best-selling books on Bitcoin. And he also runs this platform, Saifedean.com, which offers people access to chapters of his new books that are coming out later in the year, the Fiat Standard and Principles of Economics, and also access to seminars online via Zoom, such as the one you're listening to now. So all the people that are part of Saifedean.com are able to take part in this discussion and ask questions to both speakers. So we've got Saif on the one hand, and Saif is arguing that precious metals are in the process of being demonetized due to the emergence of Bitcoin and the challenge that that poses to precious metals such as gold and silver. And on the other side, we've got Mark Valek, who is a founding partner at the Liechtenstein-based firm Incrementum AG. And at that firm, he's responsible for portfolio management and research. And he manages 3 investment funds, among them the Incrementum Digital and Physical Gold Fund, which is one of the first regulated alternative investment funds combining both Bitcoin and physical gold. So Mark is very much someone who is a supporter of Bitcoin and a supporter of gold, and he sees the two assets as different complementary assets, and he's very positive about the future of both of them. Mark's also got a background in business administration. He studied business at Vienna University of Business Administration, and he's continuously worked in financial markets and asset management since 1999. He's also a reader at a Austrian economics-based think tank called Scholarium in Vienna. So I think it's clear that Saif and Mark already have a lot in common. They both have a great interest and great expertise in Austrian economics, and so it'd be really interesting to hear them debate this question. So just to run through the format for today's debate, we're going to try and keep the timing to around 90 minutes. I'm going to start off by giving you a little bit of an introduction, which I've already done. And then we're going to go to opening statements from both sides. So we've got, first of all, Saifedean giving the opening statement outlining his key arguments on why he thinks precious metals are being demonetized. That'll be about 10 minutes. And then we'll have 10 minutes from Mark to give his opening statement. And then following that, I'm going to ask a couple of questions to each of the speakers on the topic. And then we're going to go into a free exchange for about 20 minutes, 25 minutes, but we can keep this flexible, see what feels right. We don't need to stick to the timing there too strictly. And then following that, we will have about 20, 15 minutes, something like that, for people who are in this seminar to ask questions directly to the speakers. So that's the format we're going to follow. So if you're listening in and you're in the chat, please start thinking up some questions that you can ask as we go along, so that when we come to that final session, we can have some good questions for both speakers. So that's the overview of today's session. I'd now like to hand over to Saifedean to give a 10-minute overview of why he thinks precious metals are being demonetized.
Thank you very much, Peter. So first of all, I'll begin by brandishing my gold bug credentials. This isn't Paul Krugman here or Keynesian trying to tell you that gold is just a barbarous relic and it doesn't matter, because I have no familiarity with the concept of hard money. As I'm sure anybody who's read my book will know, the book speaks more about gold than about Bitcoin. I was a gold bug for quite a while, And I spent quite a bit of time in my life studying economics from the perspective of gold and studying the monetary system around gold. And my work in Austrian economics and my research in Austrian economics drives me to think that um, gold is the free market's choice of money, and it has emerged. And there are very good reasons why it has emerged as money over the past thousands of years across the world in many different societies and cultures. So I don't deny the importance of gold's historic role by any means, but I think over the past few years, with the emergence of Bitcoin, and in particular over the last few years with the lack of price appreciation that gold has witnessed, I think we're beginning to see the demonetization for gold. This is something that I'm increasingly convinced with, and it's not something that I used to think 3 years ago. It's something on which I've changed my mind about quite drastically over the last 3 years. I think a little bit more about my background on this question. Before I'd heard about Bitcoin, my idea I had an idea that I thought as a business idea, and I worked for quite a while on trying to build something like a gold-based Bitcoin, effectively a payment platform and app that would be backed by physical gold, where gold would be the money that people would use. And so instead of having an account, instead of using PayPal backed by dollars, you'd have something like a PayPal, but that is backed by gold. And I spent quite some time trying to make this happen and trying to make it come into existence. And in the process, I learned a very, very expensive lesson about the limitations of gold and the problems of gold. And the reason this lesson was expensive was that I spent these years um, ignoring Bitcoin, even though I'd heard about Bitcoin, ignoring Bitcoin and not taking it seriously. And in retrospect, if I'd spent that time washing dishes and put that money into Bitcoin, it would have been a far, far better investment than anything that I could have done with a startup on gold. So I think, having spent some time looking into it, I think the main problem that gold has, which I think we really need to confront as a problem in gold, and not just continue to blame it on government as if that is just an external an external factor, because government is a given part of life in the current world. The problem that gold has is that it has very low salability across space. It has very high salability across space if you compare it to other metals. In other words, you can, 1 ounce of gold is worth about $1,700. So you can carry quite a bit of value in a small amount of weight, which makes it easy to move it around compared to iron, copper, or silver. However, as we get into the 20th century and as we get into modern transportation and telecommunication technology, which allows people to interact with people all over the world and to trade with them, the salability of gold becomes extremely low. And so shipping a gold coin from Europe to the US is very expensive. Shipping a gold bar is quite expensive. And so in the Bitcoin standard, I make the case for why gold won its monetary role based on the fact that gold had the highest stock to flow, and therefore it has the best salability across time. And that makes it essentially most likely to accumulate value and most likely to continue to appreciate over time, and therefore it drives out all competitors. And this was true up until the early 20th century, but then, or arguably it is true even through the 20th century, because we moved to a fiat monetary system that is true. However, the fiat monetary system itself is based on gold, in that the central banks still hold gold and they still settle trades between themselves in gold sometimes. And ultimately, they don't really trust each other's paper. They mostly trust the gold that backs these papers. and all of the current fiat currencies came from currencies that were backed by gold. But what has happened in the 20th century is that it became practically impossible for people to trade internationally with gold. It became impossible for you to trade with others because if you tried to trade with physical gold, you can't set up gold banks, you can't set up in financial institutions that are gold free effectively. And so you have to end up utilizing some kind of intermediary that is able to control the gold. And then the gold gets centralized, and then it becomes possible for the people who own it in a central location to issue more receipts for the gold that they have than the gold that they have than they have gold. And so that ends up essentially undermining gold's saleability across time, because if there are monopolies supported by government that hoard all the gold and give you pieces of paper backed by the gold, well, then making those pieces of paper is not as difficult as making more gold. And so it can be made effectively inflationary. And we've had gold based inflation throughout the 20th century, arguably, because um, it's the monetary system is built on gold, and there's no possibility for building an alternative monetary system backed by gold. You can't just decide, you know what, I don't want to use my local national currency, which is hyperinflating. I want to trade with the rest of the world with a gold bank, and I'm going to open a bank that deals with the rest of the world with physical gold. You can't do that. There are no mechanisms for the settlement of trade in gold that can offer commercial banking backed by gold. And I think the fact that gold cannot be sent across the world very quickly, as is the case with Bitcoin, with very little loss of value, is what makes it vulnerable to this kind of attack by governments, and that's been the case for more than a century now. So primarily, I think that the main shortcoming of gold is the lack of saleability across space. It loses value when sent across space, and in the same way that fiat money loses value across time, and gold bugs are quite correct in pointing out how much fiat money loses value over time, and that's not um, something the market would choose. It's undeniable that in the same way, gold loses value across space when being transferred across space. If you wanted to move money across space, then with gold, you're going to lose a fraction of the value of gold as you move it across space. So now this limitation, the main limitation, is something that has been existed for about a century, and but I think what has changed now in the past few years that makes me change my mind is that until a few years ago, there was no credible alternative that could have that could develop a hard monetary system. There was no credible monetary asset around which you could develop a hard monetary system. And so if there was a collapse in fiat currencies, you would expect people to run to gold. And as you see more inflation, you would see more and more people run toward gold. I think, if 2020 happened and there was no Bitcoin, you would have seen people like Michael Saylor probably going toward gold if Bitcoin had not existed. Or, well, Michael Saylor would have probably invented Bitcoin, but if he hadn't, he'd probably go toward something like gold. But now, with the presence of Bitcoin, and I think with the growth of Bitcoin to being over $1 trillion in valuation, which is more than, I think, a tenth of gold's valuation at this point, Bitcoin has become a credible alternative. And so you're going to see a lot more of the money that is looking to escape inflation go into Bitcoin. And because Bitcoin doesn't have as much existing supply and existing demand, the potential for growth in demand is enormous, and that potential for growth for demand will likely drive, uh, encourage more people to enter Bitcoin. So $1 trillion, $1 new trillion into Bitcoin will cause the price to double, but $1 trillion into gold would only cause the price to rise around 10%. So there's far more potential for appreciation in Bitcoin. And I think ultimately, the fact that gold over the last 3 years has failed to rise in value and has, even as the dollar has inflated heavily, the fact that gold has not risen in value means that it's continuing to drop in value in real terms. And this means that it's going to start getting used more and more in industrial applications. And I think this is really the key point. The fact that that gold's price isn't rising means it starts getting used in industrial applications more. And the more it is used in industrial applications, the more the stockpile is essentially being consumed. The more it moves away from being a hard metal because its stockpile continues to pile up, the stockpile that goes into industrial applications is effectively like gold being put underground again. Because in order to bring it into the market, into the monetary market for gold as a store of value, it needs to be made into a coin or a bar, and that effectively is like mining it again. So once gold has been put into a computer, it's effectively out of the stockpile. So the more of the global stockpiles of gold get employed in industry, the lower the stockpile of gold, and that effectively means a lower stock to flow ratio. And effectively, mining becomes a more significant, starts having a more significant impact on the daily liquidity of the market in gold. And that effectively means gold becomes less and less of a monetary metal and more of an industrial metal. So I think we're seeing this trend. And I think, the failure of gold to break out over the last few years and increase in valuation significantly as Bitcoin has continued to increase. And the fact that Bitcoin has gotten to within 10x of gold's market capitalization means, I think, that the writing is on the wall, and I think gold is losing its monetary role, just like silver has lost it before.
Okay, well, thanks very much for that, Saifedean. So we did run over a little bit on the timings there. So Mark, if you want to take about 11, 12 minutes, that's fine. Do you want to, I'll hand over to you to give your case as to why you think precious metals remain in the game and are still are not being demonetized.
Great, thanks, Peter, and thanks, Sai, for the invitation. That's I appreciate that a lot. Yeah, well, let's talk about perhaps first of all the status quo, because I mean, since the topic which we are discussing is or are precious metals going to be demonetized, and I think Saif already is focusing on gold, and I think that makes sense. I would also focus on gold in this argument. Let's have a look on the status quo. In a narrow sense, gold is obviously not money, so it in the narrow sense can't be demonetized since it's not money in the narrow sense, I would say. But perhaps in the broader sense, it definitely is a store of value, and let's take this definition as demonetization. So Saif basically argues that gold will more and more be demonetized in terms of less and less be used as a store of value, and I really don't think that is the case. I think actually that what is going on right now is quite interesting, because this discussion is quite timely, since the Bitcoin camp, and I consider myself also a part of the Bitcoin camp, but let's say Bitcoiners, which only focus on Bitcoin and nothing else, are increasingly talking about that gold is not doing its job. So let's have a look. What did gold do in terms of price appreciation or depreciation? I want to push a little bit back on what I've already said. So yeah, it's let's focus on dollar terms. 2021, this year, gold price is down almost 10%. 2020, however, was a good year, so gold appreciated 24.6%. So that's nice. I mean, obviously, nothing in terms of Bitcoin, but it is rising. Same thing in 2019. So we had almost 20% rise. flattish, slight minus in 2018, but again, double-digit returns in 17 and 16, also almost 10%. So we have been seeing rising gold prices until summer 2020. So this is been going on for half a year now, more than half a year, that the prices are falling in gold. I grant that. Don't want to go too much detail why I think that is the case, but just one reason, and that's probably the main reason, is rising yields. So market expectations are perhaps factoring in some yield interest rate increases in the US, perhaps not in the short term, but in the medium term. The question is if that is realistic or not. One can debate that, but I think that's quite a good explanation for the recent decline in gold prices. But be that as it may, I think Bitcoin is increasing popularity, is taking market share as an alternative store of value like gold. So it is eating kind of in this market, but I think I'm very, very convinced actually that is the case, that this market is a hugely will grow. So since we are in this environment with negative real rates, and this is going to be the case for the time being, since all this debt situation is getting pretty insane, and all this money printing situation is completely out of control, in my view. The demand for alternative assets, store of values, will grow, and a lot of the developments on the Bitcoin side show that. I mean, Saif pointed out Michael Saylor as a very prominent example, but there are many others. So companies are looking for Bitcoin in that example, but also even gold has been looked at by different unconventional players, I'd say. But let's take a step back, perhaps. So the gold market is approximately 200,000 tons of gold exists. And if one looks at the data of the World Gold Council, they break the demand down into 4 categories. And basically it's jewelry, technology, investment, and central banks. And I would argue that 3 of those 4 categories basically are in monetary demand, or let's call it store of value demand, right? So the technology demand is, as Saif also pointed out correctly, currently pretty low. I'd say people value gold's property as a store of value higher than currently the physical properties which are very interesting of gold. This is oftentimes not seen correctly, because sometimes people argue against gold that it has no purposes, no physical purposes. It has great properties, but most of the time it's substituted by other precious metals or by other materials which are much cheaper, since people value the store of value property higher than the other industrial values. But so currently, as I said, I'd say it's roughly 10% industrial demand and roughly 90% investment or store of value demand via central banks, investment directly via ETFs, or jewelry. And I think the jewelry component is quite an important one and an interesting one to think about, because what would have to happen if gold would be demonetized, in the sense of gold will not be used as a store of value? Jewelry basically is accounting for more than half of the demands of gold's demand. And within this jewelry category, the most demand comes from India. That's traditionally like that, but also China is big consumer of gold, or demand, perhaps one should say, because gold isn't consumed as such. So one really would have to see a complete change in the behavior of human beings. So we need, if we want to get an idea of will gold be demonetized, the question which we have to ask is, will the value preference of human beings change significantly, right? So I don't think that demand for luxury, the demand for physical luxury goods will dry out completely, because that would actually have to happen, that gold will be completely demonetized, and perhaps its industrial uses will increase a little bit, but all of the jewelry will basically be melted in and only used for industrial purposes. That would be the extreme scenario, in my view, of a demonetization of gold. And there are a few reasons for that, obviously. I mean, first of all, when one talks about gold as a store of value, doesn't necessarily be jewelry, but generally, it has some advantages relative to Bitcoin. So one of them, I don't want to focus too much on that one, but I think it's worth mentioning, is anonymity. So gold has no public key, so it is purely anonymous. Not so with Bitcoin. But another one, which in my view is more important, especially as long as we live in a fiat currency world, which in my view, unfortunately, will be for the time being still, is volatility. So, and this is also being discussed a lot. But volatility of Bitcoin is high, and this argument is often being debated. And I think Saif and a lot of other people are of the view that the volatility is going to fall. I think it could fall a little bit, but I just looked up the numbers. Historically, it actually only fell in the first few years. If one looks at, say, for instance, 30-day moving average on daily volatility of Bitcoin, when one saw 2020 spikes of volatility, which exceeded the 2017 volatility, and actually the volatility has been oscillating since I'd say 5 years. So volatility hasn't dropped significantly in the last 5 years, at least. I don't think it will drop significantly either in the next few years, at least. It could drop somewhat with an increased liquidity. But the main reason for that being, and that brings me back to the point I mentioned recently, is jewelry. Let's put it differently, is non-monetary demand. So gold has a big advantage relative to Bitcoin in that sense that the jewelry demand acts as a buffer for volatility. So we have then this pattern is well established in the gold market. What one can see is in years of relatively big price increases, which mostly are triggered by an increase of investment demand, the jewelry demand drops. Again, going back to the biggest consumer, India. Indians substitute gold for other metals, probably mainly silver or other jewelry, in these years when the prices increased too rapidly. So the demand from the jewelry actually goes down significantly. We saw that last year, and what we're seeing this year again, jewelry demand is increasing significantly. So that the demand is kicking in again from the jewelry side. And so what may be an advantage for Bitcoin as money, that is, it has only monetary demand, in my view, is a disadvantage for Bitcoin as long as it is only a store of value in terms of volatility. So one can make the argument, okay, I'm hodling Bitcoins and I don't really care about the volatility. Actually, in fact, it has also advantages if one stacks stats, because the dollar cost average effect is much better with a high volatile asset. But still, if one needs to store value out of the fiat currency system, and one has saving objectives which aren't that far out in the future, obviously the volatility is a problem, because you can't really know if you want to save for a car perhaps next year if Bitcoin doesn't drop 50 or 70%. It's just a fact. It happened in the past, and I think Saif will agree that it can happen again in the future. So for shorter term savings objectives, the high volatility of Bitcoin is a disadvantage. So in that sense, gold offers a different risk return characteristics. My view as a portfolio manager is this is all no problem. One can build a perfect portfolio which combines both assets. That's what I do actually, because I think it's the most prudent thing to do for medium-term saving objectives, for instance. So this is just a different animal, and I don't think that this will change so shortly. And I give you another reason, and that will be my final reason also. Perhaps it's a little bit more philosophical reason, but yeah, Bitcoin has some advantages relative to gold. I completely agree with that in terms of hardness, which is obviously a very big argument for Bitcoin, and it's a valid one. But I think there are other properties that also matter. So at the end of the day, we are all human beings, right? So we are mortals, and life is finite. So I think the human mind, the human psychology is fascinated by a metal which is eternal. And that's one of the major properties of gold as metal. It is eternal. It doesn't tarnish. I can be sure that the metal I have today will outlive my life, and I can actually pass something physically on to somebody else, to the next generation. In the case of jewelry, one can also celebrate one specific moment in one's life. For instance, if a child is born, you send you give away a ring to celebrate this, because you want to mark the time, this specific time, and you want this ring to be perfectly the same for eternity, basically. I think this is a very strong factor. As long as we are all living in a physical world, I think the desire for a physically eternal metal will not vanish. So this is a big part of my argument, actually, philosophically. And I think also, last remark on this, actually this whole COVID pandemic may even have shown people to value real life experiences much more again. I mean, we're having this very convenient meetings all day, kind of now today, it seems, over the internet. This is the digital world. Everything is getting more and more digitalized, and that's why I totally grant that Bitcoin's role is a valid one, and its role also as a store of value will most probably increase. It may even take some market share from gold, but I don't think that we are going to live in a fully digitalized world. And I think we will value the physical experience as human beings, and therefore we will also keep on valuing physical gold.
Thanks very much for that, Mark. That's great. So I'd like to direct the first moderator question to Saif, based on that final point that Mark made regarding gold being eternal. And the first question I have relates to the Lindy effect, the idea that things that have existed for a long time are more likely to continue to exist in the future. And with gold, we know that it's got this thousands of years of history. And although Bitcoin is now got, but every day it has a longer track record, and it's showing that it's resistant to various attacks on it, there will never be a point in time when we know Bitcoin has definitely succeeded. There will always be uncertainty around Bitcoin due to its complexity and the fact that there are unknown unknowns that could disrupt its proper functioning, whether those be from government or whether those are technical problems that we know from past experience. Bitcoin has perhaps come close to experiencing at various points in the past. I'm thinking of times like the block size war of 2015 to 2017. So what do you say to people that say, Bitcoin may have the harder properties. It may be harder in terms of its kind of fundamental monetary properties, but at the end of the day, it's still a very complex system, which is prone to errors from unknown unknowns. And so gold provides that historical stability, and it provides that kind of insurance policy against Bitcoin's failure, which is likely to persist for a long time into the future, and is likely to allow gold to preserve this kind of important monetary role within the financial system.
So I think I'm generally developing an aversion to arguments from heuristics. So people think that, Lindy effect, all right, things that have been around for long should be around for long. Doesn't mean that it should apply for the example that we're talking about right now. And so invoking these kind of incantations as if they are an argument, I find to be unconvincing. So the Lindy effect, it didn't save the horse carriage from the car, and didn't save the typewriter from the computer. There are all kinds of examples of technologies displacing others. So yes, things can survive, but just simply saying that this has the longest track record is not necessarily imparting a lot of knowledge or information. What really matters is, I think, a more useful analysis would look at things from first principles. What is the problem that money solves, and how can gold solve it versus Bitcoin? Now, to the extent that the Lindy effect matters, to the extent that the history matters, it matters in the case of money. It matters to the extent that it allows for a larger pool of liquidity, and therefore allowing more salability for the asset. And so in that sense, yes, definitely gold is 10 times larger than Bitcoin right now. And so, the thousands of years of history do count for something. And that's why, if you see some discussions where I discussed this question 2 or 3 years ago, I'd be, back when Bitcoin was around the 10th of how big it is now, when the price of Bitcoin was around $5,000, $6,000. At that point, gold's liquidity was around 100 times larger than Bitcoin. And so the Lindy argument carried a lot of weight in that sense, because, the thousands of years of history meant 100 times larger liquidity. Well, now the liquidity is only 10x, and Bitcoin has achieved has achieved 10% of gold's liquidity in 12 years. So I think, there comes a point in which you need to stop being so sentimental about your typewriter and just look at all the amazing things that a computer can do. And so, obviously we're not going to live until we see a 5,000-year-old Bitcoin, so that we can then say that, all right, it's done what gold has done so far. But the reality is that with every day that Bitcoin survives and every day that Bitcoin doesn't fail, it continues to demonstrate its likelihood to survive longer. And so with every day that its liquidity increases, it closes the gap on gold. And so the advantages of longevity become lower and lower. But I think I'd like to go back to Mark's. Mark made a couple of good points that I'd like to address. I think he makes a very good point when he says, if you look at gold currently, you see that only about, 10-20% goes into technology and industry, whereas something like 50% or 40% goes into goes into jewelry. So jewelry and technology together are around 50%. So if you think of it, currently gold is 10% an industrial metal, if you think of it as only as a technology. But, and then it's about 50% store of value and 40% jewelry. So the question then is, what should the jewelry count as? And I would say, if we look at what has happened with silver over time, we're seeing something similar with gold. And I think we can say that an increasing chunk of the jewelry demand for gold is no longer really there for monetary purposes. It's becoming more and more just, the value of the gold itself is becoming a smaller and less significant part of the total value of jewelry pieces. Um, and we saw that happen with silver as well, to the point where, the jewelry use is, people are buying it because it's yellow and shiny, and because it looks good, and because it lasts long and it doesn't rust and so on. And that's different from store of value demand. They're not buying it in the sense of, I know I'm buying this necklace because I'm, if things go bad, I can pawn it. It's becoming an increasingly cosmetic application. It's becoming more and more of an industrial use, in that we use gold to make jewelry, rather than, I think, what the case was when gold was money, wherein we make jewelry out of gold because gold is money. The point was that you would make, the jewelry was there because it was extremely valuable, and so it could always be sold. But if you look at it today, a lot of the gold jewelry, it's, say, $1,000 necklace, for instance. If you were to boil it down and see how much gold there is in it, the gold will not be $900. The gold will be much smaller chunk of the total market value. So if we look at what has happened with silver, we see that similar process took place, where now there's a lot of silver that is in jewelry, but it's a very small fraction of the price of the jewelry piece. And you can be sure that people buying small necklaces of silver, or people buying silver tea sets, are not buying it as a monetary asset, and have no intention of using these things in a monetary capacity. They're buying them for the properties of the metal itself. And so we see this, and I think this really drives the point home that it is demonetization, because the price continues to fail to keep up with inflation in real terms. Like, if you look at it, the price of gold has been practically static for the last 10 years, since 2011 until 2021. It has gone up and down between 16 and 1900, maybe dropped a little bit less, hit 2000 briefly. But over those 10 years, it's not gone up. But over those 10 years, the amount of dollars out there has gone up enormously. The cost of living, the cost of real estate, the cost of other kinds of hard assets has gone up enormously. And so you would have been better off, if you wanted to store value, for all of their shortcomings and all the risks involved. There's no denying you'd have been better off putting your money in stocks, or in other kinds of financial assets. In real terms, gold is just becoming less and less valuable, and therefore it's becoming more and more affordable to be included in jewelry, and it's becoming less and less significant as a part of jewelry applications, as a part of the total cost of the jewelry piece.
Thanks for that, Saif. So I think what I'll do now is I'll turn one kind of follow-up question back to Mark as moderator question, and then after that we will just put this to a free discussion between the two of you before the final question session from participants. So my question as a follow-up to Saif's comments for Mark relates to this idea that gold is going to remain, when if you think Bitcoin is a harder money, that gold is going to kind of retain this monetary value. If we look back at history, if we look back at seashells, glass beads, animal teeth, iron bars, whatever it happens to be, we see that because of the network properties of monetary goods, it's always the strongest money that tends to outcompete all the others. And we had a bit of a dynamic with gold and silver for a long time, but a lot of people would say that silver is now becoming, relatively demonetized, and it's been gold that has been the most important monetary metal, prior to the rise of Bitcoin. So don't you think that history shows us that it's really hard for there to be two different kinds of monetary asset that exists that are kind of competing for the store of value market, that aren't, things like tangible yielding investments? And doesn't that slightly undermine the idea that gold is going to exist for a long time, whilst we have this harder money Bitcoin that's competing against it?
Yeah, I think that's a good question. So let's talk about the gold silver example you gave. And it's true, silver was demonetized, I'd say roughly around this turn of the last century. It started, and one can see it pretty nicely in the gold silver ratio, which was pretty constant and low, 15-ish, and it rose. So silver lost value relative to gold, and I think it's a good argument if one says that was due to the fact that it lost part or a lot of its monetary premium. I would agree with that observation. When it comes to comparing gold with Bitcoin, well, this is really something new. I mean, the innovation that Bitcoin gave humanity. I mean, one of the many things, but I think that the core is it made digital assets possible. It made scarcity possible in the digital world, right? So in one case we are talking about a digital asset, obviously, in the other one about a physical one, and so the question is, will every store of value be completely digital at the end of the day? That, I think, is the question. And I, as I pointed out in my introductory statement, I don't think so. I think the physical part of us human beings, the physical part of the world, will keep on playing a significant part in our lives. And as such, I think there, in this case, can be the demand for two different store of values, especially as long as we do live under a fiat currency system, because then the demand for saving or storing value out of the fiat currency system is very high, and it will continue to be high. The demand for alternative store of values is high, and as both these assets have different properties, I really think they go together pretty well. That's perhaps the short to the medium term. The long, for me, the bigger perhaps thought experience or question mark is what would happen to gold if we really had a Bitcoin standard. So that's a little bit more tricky to me to answer, because if we have if Bitcoin doesn't have any volatility anymore because it's the unit of account, right? Then probably you don't need gold for this classic store of value, because the main advantage of storing your value in gold out of the government currency was, you knew it will not be diluted by inflation, and it has no counterparty risk. So if basically this problem is solved, then I think that the demand for gold really could drop significantly in terms of store of value. Perhaps if I may just go back to one point Saif made, so regarding jewelry, I think that's again very important. Is it a store of value, or is it just kind of is it for what reason is jewelry bought? And I think in many cases, especially I alluded to India already, the dowry is a huge component, obviously. For the demand for dowry is huge, demand for gold. In these cases, it's clearly a store of value, and it's also in the Middle East. I mean, I've been to the souk in Dubai, and I was really I knew that I had heard about it, but especially went there to see it with my own eyes. The philosophy around the gold market in Dubai is 100% store of value. I mean, you see bid-ask spreads, you see the current spot rates, and the jewelry they offer is not mostly. I mean, they have obviously handcrafted stuff where a lot of working power goes in there. But if you buy a jewelry for store of value purpose, you can identify it pretty easily, because it's not huge. It's the pure gold. So they have 99% gold for their jewelry. They have, for instance, I took pictures of that, like like a net of medallions, where you have basically this kind of coins, which you can just wear. You know, you can wear your gold and run, basically. So that's, for me, it was a clear indication that this is totally the idea for buying this kind of jewelry was totally for the store value motivation. But in the Western world, I agree. In the Western world, that's probably not the main motivation. But the Western jewelry demand, I think, is not the primary demand for when it comes to gold.
Okay. All right, thanks, Mark. Right, should we open it up to discussion? Saif, do you want to have a response to what Mark just said there?
Well, I mean, definitely, of course, I think the strongest point Mark has is the fact that dowries in India and the Middle East and in many places all over the world continue to be denominated in gold. And so there's an enormous amount of demand for it. But if I go back to his comments earlier when he was discussing the volatility of Bitcoin and the volatility of Bitcoin being a problem, he was saying that the gold has an advantage over Bitcoin because it has jewelry demand that fluctuates based on what happens to the price. So when the price of gold rises a lot, jewelry demand declines, and so that alleviates the big rise. On the other hand, if gold price is dropping, then jewelry demand rises and people buy more jewelry. However, I think that itself is, and I agree with Mark that this seems to be the case, but I think that this suggests that a lot of that jewelry demand is not a store of value demand. People are not buying it specifically for store of value because it's acting counter-cyclically in a sense that people are buying it when it's dropping, and it's the fact that they're buying more suggests that it is behaving like a normal market good. So this is, you can buy cheaper jewelry, you can buy more jewelry, you can get a nicer necklace because the price of gold is dropping. So if it was a purely monetary demand, I don't think you would have this dichotomy between investment demand and jewelry demand. They would move in the same direction. And I think the bigger point here is when we need to ask ourselves, what is it that gives gold this stability in its value over the years? So one way of thinking of it is that gold is stable in terms of its value because of the jewelry demand counteracting the store of value demand and picking up the slack. And so effectively, it's like a sponge that people demand at a store of value, and then whatever, if it's too much or too little, the jewelry demand corrects for it. That's one way of thinking of it, but I don't find that entirely convincing. And you can't have it both ways. Either jewelry demand is store of value demand, in which case it can't behave, or in which case, why would it behave counter-cyclically? So I think that's not a very good explanation for the stability of gold. If I were to offer my explanation for the relative stability of gold in value over the years, and I discussed this in the Bitcoin Standard. If you look at If you look at the price of gold or if you look at the price of commodities, basic commodities in terms of gold, over hundreds and thousands of years, obviously it's not constant, but it's held on to the prices much better than other kinds of goods have. And I think this is quite, I think my explanation for why this is the case is because gold has the lowest elasticity of supply. Gold has the lowest supply responsiveness to demand. The fact is that because gold's supply stockpile is closest to constant, that's what gives it the unique monetary role that allows everybody to use it as their unit of account and their store of value. And so it's really, I think when we think about it in terms of the stock to flow, the higher the stock to flow, then the less significant the new mining output is as a percentage of the market, and the less significant miners are in price determination, which means that as the good appreciates because of increased monetary demand, it's not possible for miners to flood the market with a large amount of goods and bring it back down. And so this means that monetary demand continues to pile up into gold. And so the market value of gold continues to increase a lot. And then as a result, the variations that you would get in demand, because the market value of gold becomes enormous, the variation in demand in terms of people buying and selling gold and exchanging it for other goods will rise and drop over time in a way that is not going to be very significant compared to the overall liquidity pool. In other words, the high stock to flow ratio is what causes the market value of gold to be very high. And so new supply is insignificant in the market, and buying and selling happens according to people's changes in time preference when they decide to dishoard money in order to buy something, or when they decide to sell something in order to hold money. So these variations will just end up naturally becoming a smaller and smaller dent in the gold price as it has increased. And so what has driven that in my mind is the high stock to flow ratio. And so in my mind, the way that I see it is that as Bitcoin continues to monetize, as Bitcoin continues to become extremely large, if it does become very large, then we would expect that same process to develop with gold. I don't think it was the jewelers that gave gold its stability. I think it's the high stock to flow ratio. Once Bitcoin's market cap is large enough and the stock to flow is very high, then at that point, mining is going to be utterly insignificant, and then small variations in demand are going to not matter. So this is how I would like to think of it. And so therefore, I think, in the long run, the volatility of Bitcoin is gonna subside. When Bitcoin crosses the 10 trillion mark, I think we'll see a decline in volatility. And then on the other hand, I'd say that this drives me to think that more and more of gold's jewelry demand can't really be viewed as monetary demand.
Yeah, well, if I can reply briefly to that, I'm glad that you brought that up, because the jewelry aspect is just basically the one side. You brought up supply, and that's also very good that you did that, because we have also something very important acting counter-cyclically on the gold side when it comes to supply. Where, as you pointed out, stock to flow ratio is very high. So supply is the newly mined gold is obviously not extremely determined for the supply, but what is very important for the supply is scrap gold. And when it comes to scrap gold, that also acts as a buffer in the volatility, in my view. I mean, it's not only my view, the facts are pretty obvious on that. And it's also, I think, pretty logically that it is like that. So again, if you have a strong price increase of gold, what happens? People dig into their, I don't know, treasuries and then they find some old gold teas because they see, hey, they actually offer me some interesting money for this, and more of this insignificant gold all over the places gets sucked out and offered into the market. But if the prices aren't really attractive, then the incentive is not high that people dig in their I don't know, attics for some minor gold parts which they have lying around there, right? So this is also something which one can see in the statistics that this happens, and I think it goes both ways. It goes on the demand side and on the supply side. So again, I'm only talking in a fiat currency system. I'm talking about how the price of gold acts in a fiat currency system, and it is not the unit of account. It is not money, but it is still all over the place. And when the price fluctuates, you have especially these two dynamics, which I do think are quite important to buffer volatility. And one last thing in that regard, I mean, we do write in Gold We Trust report. That's an extensive analysis on gold, and what we saw there, and I mean, it's also common knowledge, but I think it's quite timely again. The marginal buyer of gold currently is coming from the Western financial system, or for the Anglo-American financial investor is the marginal buyer of gold. And we can see that quite nicely when it comes to ETFs holdings. So you saw after great financial crisis 2009, 10, 11, ETF holdings went up, and I mean that's the vehicle number one when it comes to gold exposure for financial investors. Uncertainties of all kinds were there. Will there be a big inflation or not, and so on. After all this QE, it didn't, at least in the official statistics in the US, it didn't pan out. And so the gold was sold again. I think that's a big reason for the stagnant gold development over the last decade, which you rightly mentioned. And again, what we saw last year, and there was some kind of a divergence in the second half of the year. We again saw huge uncertainty and a lot of demand for ETFs, gold from the Western financial system. And this time was different insofar that now Bitcoin did play a role. And as I said, I grant Bitcoin maybe taking gold some market share. But I mean, this could go in the other direction too. So whatever, I mean, we know what we can all think up scenarios which are negative for Bitcoin, regulatory, or whatever. So if for whatever reasons institutions just flock out of the Bitcoin again, you don't have this buffer, and that's just a fact, and that's why I don't think that the volatility changed significantly with market cap. So as long as you don't have that, I think Bitcoin's volatility will stay significantly higher than gold's. And I don't personally, I don't see this actually as a negative for Bitcoin as such. I think that's a huge protection for Bitcoin, because it takes Bitcoin out of I mean, regulators obviously are looking at Bitcoin, but I think they are eyeing stable coins, Libra or whatever much more closely, because they see this much more as a direct competitor, as a medium of exchange. And as long as it is so speculative, so volatile, I think they can live with it. And I'm happy to have as much of headwind, tailwind for the Bitcoin network, so that it is robust and has more time to spread all around the financial area, because then it gets more difficult, I think, to get operated out again. So I see it as a protection, and as an investor, I see it as a huge opportunity, because I mean, we write options on Bitcoin when we rebalance from gold to Bitcoin. we combine two non-interest-bearing assets and rebalance and write call options when we are over allocated to Bitcoin and put options when we under allocated, so one can make money with this volatility. So I'm a fan of Bitcoin's volatility, but I'm just saying I don't see it going away because you don't have this buffer on the demand and on the supply side.
Yeah, I mean, I gave my my perspective on why I think the volatility would go away, but I think so I'm not going to repeat that. But I'll say, yes, there has been an inflow of money from Western financial institutions and ETFs after the 2008-2009 crisis. But really, if you think about it, there's been also a flood of money from central banks, and so. Yes, more money has gone into Bitcoin, but into gold. More money than zero has gone into gold, but considering just how much money has been created and given to financial institutions and has been invested in all kinds of different things all over the world, it's gold is not keeping up. Is not keeping up with the inflation if you measure it in terms of the increase in the money supply in M2. If you want to think about it in that sense, the dollar is depreciating in real terms, and gold is not being able to keep up. It's not able to appreciate by how much M2 is declining in terms of supply. And I think the issue here is that this is, I think, the point where we can have all of our intellectual debates about volatility and all these other issues. But ultimately, number go up settles everything in the world. If Bitcoin continues to go up in value and gold continues to not go up, if the trend of the last 10 years, it doesn't have to continue exactly like the 10 years, but even if gold has a much better 10 years than the last 10, and Bitcoin has a much worse 10 years than the last 10, that's still going to mean much faster. That still could mean much faster Bitcoin growth than gold growth. And so that trend is pretty hard to see reverse. It's hard to make a compelling case for why you would see this trend reverse. You could perhaps make a compelling case for gold having a much better 10 years than the ones that it just had. But it's hard to see it outperforming Bitcoin over the next 10 years. And in that case, in reality, whatever the theoretical considerations or whatever the distaste people have for volatility or so on, in terms of real cash balances, Bitcoin is going to continue to grow at a much faster rate than gold. And I think the danger here is that as gold stops being or starts being less and less expensive, it's going to get more utilized in industrial uses, and that effectively takes it out of the stockpile. And then these industrial uses, Mark was saying that this also acts kind of like a buffer, although that's not entirely the case, because industrial, the recovered gold, the recycled gold, can, when the stockpile is declining. So if you think about what's going on with silver right now, there's a lot more silver in industry and in jewelry than there is in gold coins and gold bars. And so if the price of silver looks like it's going to rise, there's an enormous amount of people all over the world who have a lot of silver in their attic and in their machines and in their electronics that will go and sell that for cash and bring it onto the market. So the more goes into industry, the more the value drops, the more goes into industry, and the more the lower the stock to flow goes, and then the more elastic the supply becomes as a response to price, because you have a lower stock and you have a flow that can go much higher because you've got the flow from the mines, but also you have the flow from the recycling. So that can end up double depressing it. And this might really be the case for why gold's demand has been, or why gold's price isn't taking off, because as soon as it starts to take off, all these kinds of jewelry and industrial uses start becoming all of these applications of gold start finding it more profitable to sell gold onto the market, and so you get a new increase in the supply that brings the price downwards. So I think if you look at silver in the last 150 years, silver has dropped continuously against gold in terms of its price. The gold silver ratio in 1870 was about 14, 15 to 1, meaning you could exchange 1 ounce of gold for 14, 15 ounces of silver. Now it's closer to 100, and it's just been a continuous decline in the real value of silver compared to gold over that time. And I think we could be beginning to see something similar in terms of gold. And if you look at gold priced in Bitcoin, obviously you see this very clearly. But I think even if you looked at gold priced against M2 in terms of normalized for the money supply, you'll find that gold is becoming a less and less valuable store of value over time.
Okay, well, if I just may give you an explanation, which you probably agree to, I think the question is valid. Why didn't do gold better the last 10 years, say, for instance? And I think in a nutshell, as I said, I think the most important investors in gold are the Western financial investors. So the marginal investors, that is. And we didn't see this huge inflation after the great financial crisis, at least not in the official statistics. And the people who allocate these assets, I think they adhere very much to these official statistics. They are not so critical towards them, and they had a better trade. So they went into stocks, they went into real estate once more, since the inflation trade didn't happen out of gold into financial assets. And the big question, in my view, for the gold price, for the development of the gold price is, will this happen again after this another big QE catastrophe which is going on in this since 1 year now, and if the official price inflation will go too high, or if the price inflation cannot be hit, however you want to say describe the situation, I do think that most of the asset allocators initial reflex is, okay, now we've got an inflation problem. Where do we go to? We go to gold, because still it's a fact. Bitcoin, they're looking at it interestedly, and some of them are investing, but the association number one when it comes to price inflation, I think, just from history, is gold. And so equities may have a much more difficult environment than we saw the last 10 years. In the 70s, the last periods where the US had high inflation rates, equities were really bad. I mean, they went basically sideways, but in real terms, you lost money in equities. Commodities were great. Gold and silver were the place to be. And I think under these circumstances, and this is actually also my main scenario, I think the financial investor will rediscover gold. And that doesn't mean that he will dismiss Bitcoin. And I agree with your premise that Bitcoin may outgrow the gold market. I hope so, actually, in fact. But gold is not dead, also not for the financial markets. I think gold will be discovered at least once more when inflation comes back big time.
Right, thanks very much, Mark. That's some really great insights on both sides there in the discussion. As we've been talking, I've had some questions through on the chat. So the first one I've got is from Marquita. Marquita, do you want to ask your question?
Sure. Hi, everyone. So my question is actually for Mark. When you were mentioning how, right now gold is accessible to, I guess, from a global perspective, mostly financial markets. That's what's keeping gold's price or maintaining the price. Do you think gold tangibility is valued over Bitcoin's accessibility? You know, over time, assuming we iron out all the kinks, and we've seen that Bitcoin has outperformed gold over time, do you think that humans will come to value accessibility of Bitcoin because it can improve their life, essentially, over the tangible, sentimental, ornamental value of holding on to gold that they can't reach anyway? I'm just curious of what you think of that.
To some extent, I do think so, because as I said, granted, Bitcoin has advantages over gold, and I mean we all probably all know this back and forth between gold versus Bitcoin, what's better and so on. But I think I saw some golden rings on your fingers, if I'm not mistaken. So you seem to be a little bit of a fan of some jewelry, right? So I don't know if you are planning to sell it for some Bitcoins anytime soon. So you know, it depends on your motivation. You know, I think people will increasingly stack sets. So if it's really like the saving motivation, is primary, then that may be an advantage for what you said is the accessibility of Bitcoin relative to gold. Although obviously the new technologies also make gold pretty accessible. One has to say. So if you want to save in gold, that's easily done too today. But I think that's part of the dynamic which is going on already. That's why Bitcoin is gaining market share relative to gold.
But but even at the rate that it's gaining market share and the potential for Bitcoin, I guess, do you see gold appealing to more of a mass market for the purpose of storing not just storing their value even, but even just improving the quality of their life overall? Will gold be able to do that, in your opinion?
Well, it's also obviously a demographic question. I mean, you have this divide. I don't know where the line is. I don't know, somewhere in your 40s or so. It depends probably if you're a digital native or not. Then in my experience, it's easier conceptually to have something digital as a store of value or something valuable. Whereas if you talk to elderly people, they really mostly can't comprehend the whole thing. How can something virtual be precious at all? So that's obviously also in favor of Bitcoin in the medium term. But still, as I said, I mean, I think as long as we have a fiat currency system, I think gold will play a role as a store of value. And even beyond that, I think jewelry and luxury will be in high demand in a hopefully soon to be established Bitcoin standard.
I'd like to just add one thing, which is that I think, you know, gold and the market for luxury and you know, people using all of that stuff, I don't find that to be enhancing of gold's monetary role. You know, using it as ornaments and decoration is not something that's going to strengthen gold's monetary role. In fact, I think it would go the other way, because these are not liquid. These can't really be used as money. These need to be processed, so it needs to be mined again. So yeah, I think, you know, we can have a 10x increase in demand for gold as jewelry, and we could have an enormous amount of liquidation of gold from bars and coins and monetary forms, and to turn it into jewelry and ornaments and decorations and cups and plates and forks and knives and all sorts of things. And that would be the demonetization of gold. That would not be the monetization of gold. I think you know, gold or any money ideally would not have any market other than its monetary market, because having another market, the more other influences you have on the price, the more the less the less this money makes the less this money plays a monetary role, and the less the market is affected by monetary factors.
Thanks, guys. So we touched on the issue of different monetary roles for gold and and the idea of having a kind of jewelry value. And we also talked about the idea of gold being physical and Bitcoin being more intangible. Max has another follow-up question on that question of tangibility and physicality. So Max, do you want to ask your question to the speakers?
All right. Thank you, Peter, Mark, and Saif. Mark touched upon this issue of physical versus digital, and this is something I've been thinking about for a while, because Bitcoiners themselves often talk about Bitcoin versus all the rest in these terms. And if I'm not mistaken, Mark mentioned the physicality of gold as a kind of advantage. I would like to offer a different perspective. Of course, gold is physical in a way that Bitcoin is not. That's for sure. We cannot make a necklace out of Bitcoin or anything like that. But see, sometimes I think about my Bitcoin wallet as a mathematical entity, a metaphysical thing. I can think of it in these terms. But behind it, there's tons and tons of computers, electricity, satellites, and all that. And all that is physical. Maybe not as tangible as a bar of gold, but it's physical. And for instance, I have a copy, an exact clone of my Bitcoin wallet, my hard wallet, which is in the hands of my brother. He has the custody in case something happens to me. And it was quite a physical experience, handing that to my brother, teaching him to press the right buttons, looking at the screen and seeing everything. This is physical as well. Think of someone giving. So my daughter is now 21 years old. It's time for her to receive her wallet. It's also a physical experience. And just to close this thought, what we can call the non-physicality of Bitcoin can also be seen as super physicality, omnipresent presence. For instance, I can get rid of my hard wallet, cross the Atlantic with 24 words memorized in my head, and I can replicate all that with a new device in another part of the world. This is ultimate physicality. And this is quite an experience. This is something very valuable. Can't that be perceived by the new generation as something equivalent or even better than holding a bar of gold and having it stored in your safe at home or something like that? Thank you.
Well, I like your thoughts. I mean, this is well, first of all, let me clarify. I mean, I didn't bring in the physicality in terms of as argument that that's an advantage, or that's because of the physicality of gold it is somehow superior to Bitcoin. That wasn't my point. My point was that makes it, that's a differentiator. That's obviously the case, right? As physical beings, we have some kind of attraction to physical things. I mean, perhaps not all of us, but typically one is, it's difficult to escape materialism. Let's put it that way. I mean, gold also symbolizes to some extent materialism, if you want to put it a little bit critically, or again going into a philosophical thought. But I do think that, I mean, that the most of mankind, at least, will not leave the path of materialism in any time soon. So that's what I meant with the desire for luxury is really high. And again, in a physical world, gold symbolizes luxury, symbolizes the ultimate material, and that's why I think the demand for gold, for luxury, will keep being alive and well for the time being. But I see your point. Yes, you can argue there is a physical act, and you can make a physical act out of giving the wallet to somebody. But it is, I would say it is something different, because I mean, gold does have some kind of mystical attraction also to many human beings. I think not many people can are completely untouched if they see this metal. You know, there were so many dreadful wars because of this thing. You know, that's nothing good, obviously, but it just shows how strong this desire is in the humans. And my point is, I don't think this will change fundamentally. I don't think that we are going to completely erase our material needs and our connection to materialism, if you want, and therefore gold will keep on playing a role.
I should say, like, I think, as a former gold bug, I spent a lot of time reading and learning about the magic and, the impact that it has on people. And it can seem mystical at times, like this metal is just such an incredible thing. But as a recovering gold bug, I'd like to posit the observation that sniffing glue also has a significant impact on people. There are all kinds of drugs and medicines and substances that people can touch or eat or smell and experience all kinds of effects. Doesn't mean they're going to be the next world monetary standard. I think there's a place for appreciating this chemical and its properties and enjoying it in its arts. But I really think the monetary role, as I started studying money more and was confronted by Bitcoin, I think the monetary role is essentially a function of the stock to flow. It's not a function of the mystical feelings that people will get from it. And I think the physicality aspect of Bitcoin can be fixed. We can make essentially Bitcoin bearer assets that are tamper-proof, and then we could use them as in the same way that you use a gold coin. And I think, in the long run, as transaction fees are likely to rise enormously in the Bitcoin network, I can see that we'll have things like a gold bar, a Bitcoin bar. And in fact, in the previous seminar here, we were discussing this with Marquita. We were saying, you could probably see gold bars backed by Bitcoin. In other words, as gold continues to become cheaper and cheaper, your open dime, effectively, or you'll have a Bitcoin bearer asset that's made out of gold, and in some form or shape, it contains the private key, and it is tamper-proof to make sure that something similar to the open dime, and it's tamper-proof to make sure that you can't just fake it. And so, you could have a physical Bitcoin standard develop. We might end up. In fact, I once made this observation. I think Bitcoin transaction fees will continue to go up, and we might end up at a point where Bitcoin on-chain transactions are only used to mint physical Bitcoins. And then these physical Bitcoins are traded and exchanged around the world, and even shipped with airplanes and so on. If Bitcoin transaction fees continue to rise, then effectively each on-chain transaction will be, I think, the way that can maximize the use of each on-chain transaction is to use it in order to mint a physical Bitcoin and then move that physical Bitcoin around. So, the physical aspect of things can be implemented on top of Bitcoin, and it can even be implemented with gold. We may end up with a standard of physical gold that is used as money to backed by digital Bitcoin. So we can still have all that mystic, nice feeling that people like to get when they have their money, for those who want it.
No end to glue sniffing then.
No glue sniffing, yes.
No end to it. Okay.
All right. Well, thanks to everyone for taking part. That's been a really fascinating discussion. We've touched on there some of the key issues regarding gold and Bitcoin, like the stock to flow ratio and the impact that some of these non-monetary properties that gold possesses have on the price, whether that makes gold better suited to becoming money or remaining money, and or whether those are actually disadvantages. That's a really interesting discussion that I took away a lot from. We talked a bit about gold's physicality and Bitcoin's lack of physicality, and how those two things interact, and how those impact on its monetary properties. Yeah, we've talked a little bit as well about the sort of psychological appeal of gold, and to what extent this is derived from its more functional economic properties, and to what extent there's something more to it than that. But yeah, for me, it's been an absolutely fascinating discussion. I'd just like to ask if both speakers have any sort of final comments for anyone before we round things off.
No, I was great to be here. Thanks again, Saif, for the invitation. Enjoyed it a lot. Looking forward to do something similar, perhaps sometimes in the future again.
Yeah, well, we'll thank you very much for joining, Mark. It's always fun talking to you, and maybe we should do this as a ritual every time Bitcoin 10x's in gold's terms.
Fine with it. I will see if the volatility has really gone down then.
Yeah, it's I can tell you, I can report that Bitcoiners are completely devastated by all of the volatility that they have had to endure.
No, the pain is endurable, I guess.
Yes, beats glue sniffing.
Okay.
All right, thank you very much
Great.
again.
Thanks.
Cheers. Bye-bye.
Take care, everybody.
Thanks, everyone.